Okay, so remember what we started with. Let me start over here first. We introduced and we got through these guys pretty good. We talked about with the sale business, instead of not service anymore, with sales, cost of goods sold, or COGS, as it's easier to write. And remember, that's an expense account. It's going to go over here, be treated very similar to an expense with the plus minus. And then we talked about the sales tax, how from the seller's point of view, when they collect sales tax, that's a liability. But from the buyer's point of view, the sales tax gets included right into the price. So it's just from whose point of view are you looking at? So if I buy a piece of equipment, I have $1,000 sales tax. I don't call it sales tax expense. I put it right into the price of the equipment and then depreciate it over the life. Sales return. Remember, that's a contra revenue. It's opposite. It's opposite of the normal minus plus for revenue accounts. And only the seller will use that. Because you can't have a sales return if you're the buyer. That's an impossible scenario for an account to be used. And then we just started here looking at, we finished off with the purchase discount versus the sales discount. Now, in all actuality, they're the same. It's the same amount. They're both the discount on whatever the company's giving. It's just how it's treated for accounting purposes. For the buyer, remember that when you have a purchase discount, there is no account called purchase discount. What you do, though, with that discount amount is just take it off whatever you listed the asset at. So if you had a $10 discount on the inventory, you would credit your inventory for $10 to show that you reduced it. We'll do that example here in just a minute. And then from the seller's point of view, you call it a sales discount, which is another contra revenue, just like sales return. You're reducing the amount of sales you have in total. Again, it's important to remember that this is for the seller only. You can't have a sales discount when you didn't even have a sale, when you're the buyer. Again, it's an impossible. And when we talked about these discounts, we talked about them in terms of if something said 210 net 30, remember that meant you get a 2% discount if you pay within 10 days. Otherwise, your total due is in 30 days. No discount. That's what that's meaning. Now again, I'm going to be doing the journal entries from the manufacturer's perspective. I'll be doing the journal entries from both perspectives. I'll be doing the T accounts from only the manufacturer's perspective because I don't have really enough room to do both sides. It might be kind of confusing. The reason why I have you do it from both sides, Bling, the buyer, and the manufacturer, because when we start looking at examples like the Tony D's, sometimes Tony D will be a buyer, and sometimes Tony D will be a seller. So we need to know how to do it from both sides. But generally, hopefully you see that we won't be always doing it like this, where we do what Bling says and what the manufacturer says is the same. But it's good, you have to be able to know how to do both sides. So we ended the day looking at number 6. And I believe we got this far with number 6. Does everybody have this much on number 6, I think? Yes. Okay. So just a real quick recap, what we did. We bought the machine, and we need to list everything the machine had. So we had the sticker price of $500 or $5,000, sales tax at $250, We don't know if there was a purchase discount yet because we haven't paid it. So that's why the equipment's valued here at $5,250. And then the manufacturer will get my T accounts up to date. We had accounts receivable from Bling for $5,250. Sales revenue, $5,000. And my sales tax payable of $250. My second journal entry, cost of goods sold, $1,667. And I credited the inventory. Again, we would have had previous inventory going on. So now I'm up to date. Now, when we get to number 7, we got to start thinking what we're going to do. So we're on the 18th now. It's been 13 days, and Bling pays the entire bill. Why would a company even give us this option? Why does a company even give you a...
Just so they can get the money back faster?
Yeah, that's a big reason. So they can get their money faster. And why do they want their money faster?
Interest.
They're probably not going to invest the money, but what would they do with that cash?
Buy more inventory.
Buy more inventory, yeah. The more money you have, the more inventory you can buy. The more inventory you have, the more you can sell. So even if you have to give them a little bit of a discount, it's usually worth it, and just keep buying more inventory and selling it at a profit, whatever your markup is. All right, so on the 18th, we do pay the bill. Bling pays the bill. They offer us 3% if paid in 15 days. The bill is paid. The bill is paid on time for the discount. Now we got to show that. All right, so Bling. Let's look at what the journal entry would have normally been if no discount was even offered. I think that'll help us get started. And then we'll insert in how it's just a little bit different with the discount. So if no discount, what did Bling, what's going to be my debit here? What they get when they make their payment?
You would have paid in cash.
No, Bling doesn't get the cash.
Oh, I'm sorry.
A lower account payable.
A lower account payable, yeah. We owed them $5,250. So I would have said manufacturer on my account payable, $5,250. And why did I get a lower balance?
Because you paid off your debt to them.
Yeah, I paid it, and I paid it with cash. Okay, so that's what the normal entry would have been. But now we have a discount to factor in. How much, okay, so pretend I have this little T account down here if I'm doing Bling. It says $5,250. Because that's what my credit was right here. So I got my credit account at $5,250. How much do I owe the manufacturer when I pay my bill on the 18th? How much should my total down here be?
$5,092.50.
$5,100.
No. Think. Once I pay the bill on the 18th, how much should be left that I need to pay the manufacturer? Zero.
Zero, sorry.
So what do I have to do as my debit here to make that happen? What do I need to debit and how much?
Debit your payables, $5,250.
I need to debit the account payable for the full amount. All right. Now, did I pay them $5,250?
No.
No. This is where the new stuff comes in. If I'm the buyer, how much am I paying? Let's skip a line. I'm giving you a hint here. Skip a line. Well, you wouldn't have to skip a line on this one, but on the other side you do, definitely. How much am I paying? And then we'll explain how we get that. But
I said $5,092.50.
Not quite, not quite.
Is it $5,000?
Nope. Oh, he's closer. But you're not that far off. 5,100. How'd you get that?
3% of 5,000.
Yeah, remember, if you read back up, it says base price, you get a 3% discount on the base price. And our base price was 5,000 because you don't include the tax on the base price. Yeah, that's what you did. So we actually get a discount of $150. So if I take $150 off of my bill, that leaves me with $5,100 that I actually paid. What's left? What do you think's left here?
No sales tax payable.
Nope,
No.
not sales tax.
Purchase discount?
Okay. But remember, no account
Oh.
is called purchase discount. Instead, inventory. Or in this case, it's not inventory. That's not what I bought. I bought equipment, the asset. That's what I state here. Reduce the cost of the asset that you purchased. So I know that's what you meant to say. Equipment. I got rid of the account payable. And if I was doing the T account for Ring Bling, their equipment originally up here was $5,250. I don't want it on my books at $5,250 though, because that is not what I paid. I need it on my books at what I actually paid it. Thus, I have to come over here and take off a little bit of that price. That's what's going on from the T account perspective. Why you have to credit a little bit of the equipment account. Okay, let's over to the other side now. The manufacturer. What'd the manufacturer get? They got cash. How much?
5,100.
Good. 5,100. Why did I get the cash?
Because we believe paid their balance.
Yep. Ring Bling paid their balance. So, how much should be left on the AR account after I receive the 5,100?
The 150?
Zero.
Ooh.
Oh,
0.
0, yes. Good one. Got to be careful because that's very common. A lot of students want to make the mistake here and put 5,100 over here in the credit. And you don't want to do that because that still shows a $150 balance. But they don't have a $150 balance because they got that taken off of their bill. They got a credit. They got a discount. We want this to be 0. And to make that happen, I need to credit my AR by $5,250. So skip a line, and then we'll put in here the AR of $5,250. What's that last account then going to be to equal everything up?
Sales discount?
Sales discount. That's right. it's a contra revenue. So its plus minus is the opposite. Key things to remember on this that so many people like to mess up on. We don't want to debit this side for just the $5,100 of the payment. Why? Why don't I want to debit that for $5,100? Why do I not want to do that?
Should still have a balance.
I'll still have a balance. And should there be? No, I paid it in full because I got a discount. And then so many people want to do this too. Sales discount. Don't want to do that. We never had a sale up here to take a sales discount from. Doesn't make any sense. And if you did it like this as a credit, you would have a negative sales discount. And that doesn't make any sense either. Back to number 8 in a minute. But we need to discuss one more topic before we do. And that is shipping. That's going to be my last 2 items up here. 5A, FOB, shipping point. FOB shipping point. I'll put a couple more details on here in just a minute. And then 5B, FOB destination. Again, I'll put a couple more little reminders once I discuss them. The best way, in my opinion, is to look at this on a picture level. Now, I'm an artist. This is my warehouse. Here's my loading dock. Here's UPS, their loading dock. And here's the retailer. The buyer. So the seller, transit, buyer. When it's FOB shipping point, FOB stands for free on board. Free on board. When it's FOB shipping point, it's free on board, it's free to the buyer, all the way to right there, to the shipping point. Just that little teeny tiny distance. Therefore, the buyer pays the shipping. It's free on board all the way until it gets to the shipping point right here at UPS. Buyer pays the shipping. When it's FOB destination, it's free on board, it's free to the customer all the way until it gets to the destination. before seller pays. These two titles also tell us when the goods change hands, when it actually becomes the buyer's property. Because that may come to be into play. Let's say UPS, something happens and the package gets lost. Well, who needs to get in contact with UPS? Is it the seller or is it the buyer? Well, it depends on the terms. If it's FOB shipping point, change of hand occurs right here. So the buyer gets possession. Buyer gets possession. I'm having mark SESS. Buyer gets possession right here before the shipping. When it's FOB destination, the seller retains possession until delivered. Until you sign on the little dotted line over here as the retailer. So when it's FOB shipping point, it changes hand as soon as UPS gets it. You take it off of your dock. So if the goods are, let's say you sold the goods, but they're still here on your loading dock, technically the transaction hasn't happened yet. It only happens as soon as you put it on the UPS truck. If you had to be very technical about it. Thus, when it's FOB destination, this is the only time that there will be a shipping expense. And it will be from the seller's point of view. FOB destination is the only time you should have a shipping expense on your books. Because the seller is responsible for payment. If it's FOB shipping point, well, that's number 4. Has a cost that gets included to get your item to your store. FOB shipping point costs. Remember the general rule then. Any costs that get the item or the asset ready to use or sell, depending on your purpose.
What does that say there?
Included in the buyer's purchase price, any costs that get the item ready to use or sell. So that even includes things that I don't have listed up there. Maybe there's installation fees. Same example as we just did. Everything's the same except we have one new item we have to add in here. There's delivery terms. Key things here. Obviously this one we have to know what the terms are, FOB shipping point. And then the other key item is the shipping company charges the manufacturer. UPS could care less what your shipping terms are. They don't care. They just want their money up front. So they're not going to wait around for the buyer to pay them. They're going to have the seller pay it, regardless of what the shipping terms are. You don't see any more, and most of you would need to, and probably even know, but there used to be things called CODs, cash on delivery. But they don't do that anymore.
You're
Right?
making us feel old.
Huh?
You're making some of us feel
Yeah, I know.
old.
I used to see that when I watched The Price is Right, I think, we'd say CODs. Okay, so the manufacturer is going to be charged up front. However, the terms are FOB shipping point, meaning that the buyer actually pays. So when it's FOB shipping point, let me add this in here. Buyer is responsible for the shipping costs. Regardless of who really pays it, you just may have to pay the seller back. But the buyer is ultimately responsible. And one of the things I think will help you as you're looking at when we start the next one is when you list here the equipment, list everything that it cost you. So we've got the sticker price. Is there any sales tax? Is there any discount available? And is there any shipping? Those are the four main things we're going to be focused on. And all of those need to go into the price of my equipment. As my little thing up there says, anything that's included in the buyer's purchase price. So the sticker cost was $5,000. We already did that. That was back up in number 6. We already did the sales tax. As of the 5th, there was a discount offered. We just don't know if it's going to come into play yet. So that one we could put a question mark, knowing we need to come back to it. And shipping, yep, that's my responsibility. Because it's FOB shipping point, they are charging me, the buyer. Thus, my equipment is valued now at $5,450. All of these guys added up. And then we'll have to come back to the discount later.
So with shipping and everything, you added that all into the total and that's what you post?
Mhm.
Okay.
Everything, yep,
I was
any
about to ask about
costs.
that.
Any cost that you have to do, I don't care what it is, to get it to your store,
I didn't know if shipping would be a separate
No.
thing. Yeah.
no, that's a cost to get it to the store. Sales tax, that's a cost. Even installation, if they have to come in and put it in and they cost charge you,
Okay, so it just goes into the total.
yep.
That makes it a lot easier than what I expected.
Okay, so that's pretty easy for July 5th. Now we just need to do it from the manufacturer's point of view. How much are they planning on receiving from me as a, this is very similar to number 6, just some different numbers. How much are they charging me and billing me for? What should my AR be?
5450.
$450, yeah.
So if they, even with shipping, even the shipping doesn't go directly towards the other person, and then that goes to somebody separate, wouldn't it? Or no?
Oh, no, the shipping, if we were to show the shipping from the manufacturer,
Mhm.
we're doing that here.
Okay.
That's what we're gonna do. So, Ring Bling owes me $5,450. Now we just need to break down, where is that $5,450 going? Okay, before we only had $5,250, and I broke it down. $250 of it went to sales tax, $500 went to my bottom line. Now we've got an extra item we have to account for. So here's the two we originally had. Those two still stay the same. what's my last credit gonna be? I'll give you a hint what it's not. So many people want to do this, and you tell me 2 reasons why this is not right. 2 reasons.
They didn't actually pay the shipping.
Good. They didn't actually pay the shipping. The seller is not paying any of their own money shipping. So they can't call it an expense if they're not paying their money. Just like they don't call sales tax an expense. That should give you a clue of what account I'm going to be using here in a minute. Sales tax payable says I'm going to be paying the government in the near future.
Would it be the cost of goods sold?
Nope, not the cost of goods sold.
Cash.
Could be cash, could be. If I paid UPS right now to deliver it, I would put cash. But more likely,
Shipping cost payable?
well,
Is it
I'd want
payable
to. I'd want to say who is it that I owe?
UPS accounts payable, UPS.
Yeah, accounts payable, UPS. But what's the other reason why I don't want to use shipping expense here as a credit?
Expenses can't have a credit.
Expenses don't have a credit. Exactly. I would not want to show a negative expense if that was the expense. Of course, that's cost of goods sold. But any shipping, any expense will look like this, plus minus, and I wouldn't want a credit there. What I want to show, if you put cash here, I wouldn't count it wrong. Unless I specifically told you that we put it on account with UPS. If you put cash there and said, I went ahead and just paid UPS right there, that's okay. But more likely, you're going to pay UPS in one big batch. You're going to pay for all of them at once. I owe 200 of my customers' money that they sent me needs to go to UPS. I'm just the middleman, just like sales tax. Now, we're not done yet with number 8. Because what do you also have to do when you're the seller and you sell something?
The cost of goods sold.
Mm-hmm. How do you think the cost of goods sold changes with adding shipping costs to my sale? It wouldn't. It doesn't change, you're right. It still cost me $16.67 to make this equipment based on that 200% markup back in number 6. So that would be a very common, well, I don't say common, but maybe a type of test or quiz question I would ask would be something like, how does FOB shipping costs, when I sell something, affect cost of goods sold? You would say, no effect. It does not affect what it costs me to make this item, the eventual shipping. Okay, so we go down to part 2, July 18th, when we actually make the payment. I have an account payable based on, bring it back down a little bit. I have an account payable on my books for $54.50. I now make the payment. What do I need to debit my account payable for? How much do I owe the manufacturer? I did owe them $54.50 on my books. When I make the payment on the 18th, I hope you can see that I owe them 0. So therefore, I need to debit $54.50, the whole amount. even though I may not be paying $54.50. They still receive a $150 discount on the base price. The base price didn't change. It's $5,000. It's a purchase discount. So I don't use purchase discount. I use the cost, whatever asset I was dealing with, in this case equipment. Now I switch over to the manufacturer side. What did the manufacturer get on the 18th?
Cash.
Cash. How much?
No, 5,300.
5,300. What else am I going to debit? My what?
Sales discount.
Sales discount. I'm the seller, so I give them a sales discount. Why is it wrong then to do journal entry number 2 down here and do cost of goods sold and credit the inventory? Because I have some people that like to do that. Why is that wrong to do this entry on the 18th?
Because you already did it on the 5th.
I already did it. That's it. I already did the cost of goods sold up here when I made the sale. So people get in a habit, oh, I'm the seller, I got to do 2 entries. Well, no, you only do 2 entries when you make the sale, not when you collect the money. When you collect the money, it's just normal. Normal 1 entry. No cost of goods sold again. Or I get people trying to add in sales tax again. They try to put in a sales tax. I already did the sales tax. I don't want to do it twice. And that's why a lot of times if you make T accounts, you may catch that. You're like, hey, I already have $250 in sales tax. I don't want to add another $250. They don't tax me twice. The last example. How is this entry going to be different if I change the terms to FOB destination?
That's when the manufacturer would have his shipping expense.
That's right. So from the buyer's perspective, how much does the equipment cost the buyer when it's FOB destination?
$52.50.
Yeah, just the same as it was back up in number 6. In this case, the buyer doesn't even know what the shipping costs are. It's irrelevant to them. The seller's paying it. And then you can see here that this part's exactly the same as number 6 was too, when they turn around and make the payment. There was no shipping to even worry about. They got their discount because they had an early payment. No shipping involved. It's the seller side where there's some changes. The first part looks exactly the same. Note, Ring Bling doesn't owe me that extra $200. They only owe me the revenue, the purchase price, and the sales tax. Just like it was in number 6. So that's looking at just what the buyer owes me. However, just because the buyer doesn't owe me any shipping, there still is shipping to be accounted for. I still had to pay $200 to UPS. It's just now that $200 wasn't included in their bill. That's my expense. And I show that as a shipping expense. The only time you're going to have a shipping expense when it's FOB destination. I'm still not done with that transaction. What am I missing?
The cost of goods sold.
Cost of goods sold, yep. So as you see here, I have 3 journal entries just for one sale. That's why I put last time at least 2 journal entries per sale, because on this one I have 3 entries on my sale. I accounted for the sale, I accounted for the shipping, and the reduction of my inventory. Brad, how much is Ring Bling going to pay? How much did the manufacturer collect in cash on the 18th?
It would have been 5250, wouldn't it?
Typically, yes, it would have been $52.50. But when they got the check on the 18th, they got it for a little bit less. Remember, we offered them a discount? So, Maria, what'd you say? How much is it?
5,100.
5,100, yeah. Cash coming in, same as what Ring Bling paid out.